Hello guys, this is Oba FX and welcome once again to my YouTube channel. The last video I posted was cheat code on how to trade the M pattern, and just to follow up on that particular video, we'll be looking at something similar, but this time it will be on how to trade the W pattern. As we know, even structurally, the W pattern, it's like the inverse form of the M pattern. So though the logic would be the same, but to just be like in the opposite direction. So very quickly, what are W patterns, or what is a W pattern? W patterns are patterns formed by price on the price charts at usually at the end of a down trending market or as a continuation of an up trending market. So in other words, W patterns, they tend to signify the beginning of a bullish trend or the continuation of a bullish trend. So that now leads us to the question, where should we mainly look out for W patterns? So it will be best to look out for these patterns as when we feel like a downtrending market or a bearish market is gradually coming to an end. So if you ask, I would say that W patterns can be referred to as what? Bullish reversal patterns. So as was the case with M patterns, what are the types of W patterns? Just like the M patterns, W patterns have different variation in terms of what formation. We have the popular one, which is the double bottom, which we popularly refer to as what? The double bottom. In other words, we have price being rejected from exactly the same point on the price chart. Now, what do I mean? So if this is a W, this is the most popular form of W pattern. So when price is rejected from the same level, in other words, price got to this point, was rejected, came back to the same point and was pushed upwards. And then, of course, another part of this formation would be the neckline, which is a very, very important part of it. So just like we had for the M pattern, the W pattern also has a form in which, excuse me, sorry, let's go back. Okay, the W pattern also has a form um, in which price at the first level, price at the first level would be what? Lower than the price at the second level. Now, what do I mean? If I'm to draw this in another form, so price gets down to this level, goes up, and while forming the neckline, then price goes down a bit instead of coming to be rejected at exactly the same level. So the second leg of the bottom would be what? Lower than the first leg. So this is the second variation of what? The W pattern. And then of course, just like we had in the M pattern, the last type of W pattern is formed when price gets to the same level, being rejected, and while the neckline is being formed, price fails to get back to the initial level. So we say that this is still what? A W pattern. And then, of course, we still have what? The neckline. So this is the first variation of W pattern where price is rejected from exactly the same level. And then the second variation of the W pattern is when price is rejected from almost the same level, but the second leg gets to form like a lower low instead of a double bottom. And then in the second instance, the second leg gets to form like what? A higher low instead of what? a double bottom. But in all three instances, the principle for trading them remains the same. So that leads us to how to trade this W pattern. So just like we explained for the M pattern, to trade the W pattern, all we need to do is to wait for price to break the neckline, and then we wait for a retest of this neckline. Then we look out for a change in trend, and then we take our trades in the upwards direction. So just as I also explained for the M pattern, this may be the textbook appearance of this pattern or textbook explanation on how it is being traded. But in reality, when we are to go to the chart, you see that there are times where price can break this neckline a bit, come into this level, play for a while, then give us reversal candles, and then we can take our trades in the upwards direction. Now, the point I'm trying to make is that this pattern remains valid until price breaks below this double bottom mark, maybe makes a retest and then continues downwards. So now let's look at the price chart proper for examples of this pattern. So the easiest way to spot this pattern would be to simply go to the line graph. And the first I can already see here, remember we said that most times we spot them at the bottom of a downtrend, signaling the beginning of an uptrend. So we can see here that price came down to this level, ranged a bit, and then we can see that we have a beautiful W pattern here. So let's see how we would have traded this if we had caught this early. So what I would have done would be to map out this neckline, because this is the first leg, the second leg, the second leg, and then the other parts of the pattern. So we can see that this is a variation of the W pattern in which we had a low, we had a lower high, and instead of coming to form a double bottom, we ended up going upward. So I would have simply mapped this and go back towards the candlestick. Then let's go to the H4 time frame. So let's look for what we'll map. So okay, on the H4 time frame, I would have simply made an adjustment of this pattern. So we can see that price left and then came back to the neckline of the pattern. So if we go down to H1, you see that price did a whole lot. Now, if I were to take my trade here, I can already see like an inverse head and shoulder. Sorry, still this out. I can see like an inverse head and shoulder here. So on the break of the neckline, on the break of the neckline, then I'd have looked for buying opportunities. But the easiest way most times would be to impute a counter trend line. And once this trend line is broken, we take our trades, and then we can have our stop loss beneath this place. So you can see that just by merely doing this, you see that price rallied upwards, and this would have made us massive profit. So let's go back to see if we can get more examples. So go back again to the line graph. So this is, in as much as we just got this pattern here, we can see another one here. Can see that price formed another W here. To take this out, price formed another W. So let's take this and put it here again on the neckline. Go back to our graph, scale down to the lower time frame. Adjust this, and let's go lower to the H1 time frame. Remember, because we're taking our structure, the W pattern structure from the daily time frame. So we can scale down to the H1 or the 1 hour time frame to take our entry. So you can even go further to the M30 to take your entry. So you can see this one played out more clearly or clearer than the first example that we just took. So I've simply placed my counter trend line here. You have price coming down, did a dilly-dally, and then voila, the break of the trend line, you take your trade, and then you can see this would have made you massive profit. So let's see if we can get one more example before I call the video. Okay, so let's see if we can get one more example. Okay, voila, I think we have another beautiful example here. Now, this is beautiful because it's actually at the end of a downtrend. This is beautifully formed W pattern. This is a neckline. So this can see that the price came down, moved up a bit, came back to almost the same level, pushed up, and came to retest the neckline of the W. So if we go back to the candlestick charts, all we would have needed to do would be to scale down to the H4 time frame. You can see price came beautifully to test it. So how would we have taken our trade? Let's go to H1. So we can see that even because the candlesticks were moving down with very, very strong momentum, all that I've simply done would maybe to probably still go down to the M30 time frame. I hope we're able to get that here. And on the M30 time frame, a simple counter trend line. Once broken, we'll take our trade. Now you can see this. This would have made you massive profit if you had the psychology to hold on to the trade. So guys, this is a simple cheat code on how to trade the W pattern. So if you are able to master this, now this is quite easy for me to spot because I've done it over and over and over again. So what our advice is, on your own price charts in your own free time, you can do this just to see how it played out with several pairs. So like I always plead, if you're coming across this channel for the very first time, please hit the subscribe button or the like button, and please help me to share this video as I'm trying to grow my channel. So turn on your notification button, as from time to time I drop videos to contribute to your trading journey. And if you would like to get tips on how to trade the forex market like this, I run a trading academy, and we're starting our July classes the 3rd of this month, which would be on Wednesday. So for all those that would want to be part of this mentorship class, you can reach out to me via the WhatsApp number on my bio. Thank you very much for watching. Thank you for supporting my channel, and cheers.